just wanted to thank Haysmacintyre for putting this together again. We're going to run through some really interesting stuff. Dom's done a great job of keeping it down to about 4 slides, which is excellent, so we can actually have a discussion. You all know about greyhairworks, but Tash, do you just want to introduce Haysmacintyre before we get going?
Sure. Hello, everyone. So I'm Tash Frangos. I'm head of corporate at Haysmacintyre. We're accountants and tax advisors. Dom is one of our directors in our outsourced team. So we specialise in working with scale-ups. My portfolio is focused on creative media and tech businesses. I headed that sector up for many years as well, and it's our largest sector. We tend to get in relatively early and we'll provide 6 or 7 different services to our clients along their journey, right? Anything from like bookkeeping, management accounts prep, to R&D, tax credits, share option schemes, tax advisory services, all the way up to some sort of exit event. We typically seem to be there at that point as well. And we'll help the business and the founders exit tax efficiently through that process. It still remains quite a busy time for seeing lots of activity in that market. You're obviously earlier on in your journeys, and that's also really enjoyable for us because that tends to be the time when we can add the most value because you know, you're growing and scaling and your needs become more complex, and so that's the bit of the job that we love. Is that okay?
Fantastic, absolutely, and that's like why we like working with you. In particular, that life cycle, you kind of got the view all the way along, and you can help all through that journey. So that's great stuff. Thanks, Tash. So Dom is going to take us through this today. So he's got about 10 or 15 minutes of material, and then either ask questions, put it in the chat, or butt in. But maybe we'll let him go through his slides, and if you put it in the chat, I'll pick them up as we go, or we'll just kick off at the end once he's done. So, Dom, over to you, mate.
Brilliant, thanks so much. Yeah, thanks for the introductions. Just to add to what Tash said, yeah, Dominic, I'm a director in our business support team. My portfolio is mainly in the kind of the creative media and tech sector. I specialise with small scale-up companies. I've been working in outsourcing my whole career, 9-10 years now. So hopefully I can share some useful insights today on what I think good practice is for management reporting. Yeah, hopefully we'll find that useful. So a brief agenda for the session. As Andy said, I'm going to try and keep it to 10-ish minutes so that we can hopefully have a few questions at the end. I think firstly it's important just to really remind ourselves why management accounts are so important, because that should be a given, but for for a lot of people we forget why they're important. So just really reinforcing that message really. Secondly, a few insights from my experience on how you can get the most out of your financials, and that will lead on nicely to the use of KPIs, whether they're financial or non-financial. And then we'll run through a demo report that we've created, which will hopefully give you a flavour of what a good board pack or management report pack can look like. And then, as I said, leave a bit of time at the end for some Q&A. So just to remind ourselves, really, why do we do management accounts? Why are they important? I think it's important that we have them, but firstly, they need to be accurate and they need to be timely. If we can get them accurate management reports quite quickly after month end, then obviously they're going to help us make better decisions. We'll have better visibility of the business. We're going to have better control, so we can identify trends early, for instance, in sales, seasonal sales, for instance. We might have more visibility over our costs, which is often quite a neglected part of the business. We obviously focus on our revenue, but sometimes forget to monitor our costs, which can escalate quite quickly if we don't pay attention to that side. Obviously, it helps with cash flow as well, because we can see the current financial position, and we can assess whether, we can go from there whether we need to do some more cash flow forecasting or planning work. And it's absolutely essential as well for attracting outside investment. So very, very common for a third-party investor or a bank to ask for your management reports. It's going to be one of their first items that they ask for when they're doing their due diligence. So if you've already got accurate and well-presented management accounts in place, you're going to look like a professional and organised business right from the outset. So that's really important. Obviously, this isn't an exhaustive list, but it just kind of reinforces some key reasons why we prepare management accounts. So how do we get the most out of our financials? I think it's important to start from, right from the beginning in terms of the system setup. You have to be receiving close to real-time information, otherwise you're making decisions based on old information. Obviously, everything's moving to the cloud, has been for a number of years, so hopefully your financials are already in the cloud. And that has meant that, data processing or routine accounting tasks, the time needed to do those tasks is far diminished. So you've no real excuse in this day and age for you not to be receiving timely financial reports. Secondly, is making use of apps. So as I said, hopefully you're in the cloud already, you're using a Xero, QuickBooks or an equivalent, but that's only part of the solution. Xero, for instance, which we're massive fans of, Xero has over 1,000 apps in its app marketplace, and there's pretty much an app for any pain point or challenge that your business is facing. Obviously, it can be a bit of a minefield, which is another discussion. But if you're facing a challenge with your cash flow forecasting, your data entry tasks, your credit control, there's an app that can support you. So I think it's important to be aware of that, because that obviously all feeds into your outputs, your reports, and I think there's a direct correlation between the effectiveness of your financial system setup and actually the data that you receive at the end. So for the reports themselves, what should you be including or what should you be receiving? I think it's really important that you receive an executive summary to receive some of the key insights to make decisions. I think historically there's been a management report will consist of a balance sheet, a P&L, and maybe a cash flow statement, but it's all numerical data. It's not easy to interpret. So having that summary in place to pick out the key points of information relevant for the business is really important. And presenting that graphically is also really important as well, because a lot of people making decisions might not be financially trained, and you want to be able to easily interpret the data. That's the point of the report. Finally, I'd just add as well that obviously the financial data is normally the main focus of these reports, but actually non-financial information is really important as well. So it's thinking about how can we bring in, for example, non-financial KPIs into the report, so that you've got all the data you need in one place, rather than having to prepare a financial report and then doing some work outside of the system.
What's an example of a non-financial piece of information?
Yeah, so good question, Nick. So it could be a KPI. So for instance, for a software as a service business, a SaaS business, you might look at customer retention rates, or the cost of acquiring a new customer, customer acquisition cost. So things like that. I mean, there's quite it's a subtle distinction between a financial and a non-financial KPI sometimes, but it's really important, especially for businesses in that space, to not just be focusing on gross profit margin. It's measuring number of new customers and that sort of stuff.
Cheers, Dom.
No problem. So I've just highlighted actually here on this next slide a couple of I won't go into them all in detail, but just a couple of reasons why KPI is important and some examples of some financial and non-financial KPIs there. I think really the message I want to get across on this slide is, I think everyone will agree that KPIs are important, and I think a mix of financial and non-financial KPIs makes sense. It's really how do we bring those to life, and how do we bring those into our financial reports? So I think the first thing to do is we have to define them. We have to define what KPIs we want to measure, and they have to link to your strategic goals. That's step one. Next, you choose your KPIs. So what KPIs are you going to use to track and assess your performance? I think it's important to say that it's, you don't just select a KPI because it's easy to measure. It might not be relevant to your business or particularly useful. I think it's important not to have too many, and I think it's important also to have a mix, as I said, of financial and non-financial. So that needs some thought. Once you've chosen your KPIs, I guess it's considering where you're actually going to get the information you need to measure this. So, we mentioned briefly a second ago around the non-financial data. Where are you going to get that information from? Are you going to get that from your website backend? Are you going to get that from your CRM system? Are you going to get that from your sales system? Wherever it is, but you need to be tracking these kind of things that are important to your business. And then finally, the final bit of the puzzle, I guess, is how do you visualize them? Do you present them on an online dashboard that you can share, or do you include them in a board pack? I think probably now is a good chance for me just to switch across to the example pack that I've put together. Hopefully you guys can all see that. Let me know if you can't. I'll try and zoom in. This is just a demo report that I've prepared. It's based on demo data, but hopefully it'll just give you a flavour of, you know, hopefully what a good board pack or a management reporting pack will look like. I'll just skip through just in conscious of time. So I mentioned the executive summary is really important. So here, for example, we've just picked out some key trends on the P&L that you need to bring to management's decision, things that are happening in the month. We've picked out some highlights. So it might be, you know, alerting management to the fact that, you know, around an increase or decrease in margins. It could be, if cash is really important, it could be highlighting what the current cash balance is, so it's really clear at any point in time where you are. And we've also picked out a KPI here. So for this business, it might be that age receivable days is a really important metric. And we're tracking age receivable days in this business at 95 days with a target of 30 days. So obviously, we're not collecting our debts anywhere near as quickly as we should be. So we've highlighted that. And we've also included some strategies as to how we could bring those age receivables days down. Let me just zoom in a little bit. Hopefully that's a bit clearer. So obviously the executive summary can be completely tailored to the business needs, but it's just meant to be a concise snapshot so that a user doesn't have to scroll for every page. They can just pick out the key information off one page. Then we present our KPI results. So this is split by KPI types. You've got profitability, activity, efficiency, etc. Hopefully you'll agree this is quite nice to read. It's quite easy to interpret. We've got almost like a traffic light system, which we can see which metrics are on track, what's off track. We're comparing the month of September here against our budget, which we've imported into our accounting system, but you could equally compare this against a prior period or a prior month if you wanted to see how you progressed over the course of a year or a month. We're also including under the profitability section down here, you can see we've got some non-financial metrics here. So we've got our financials like gross profit margin, for instance. Then we've also included our customer churn rate or our monthly recurring revenue or our customer acquisition cost, for instance, just to bring that mix of things that we were talking about to life and all in the same pack. Because a lot of these historically, these kind of metrics were done outside of your financials. But I think it's good to have them all for completeness all in one place. We've also set up some alerts as well. So, you know, depending on the business, you know, gross profit margin might be a particular area of concentration, or age receivable, accounts receivable days, which I mentioned earlier. So we can set that up as a critical or a higher importance category. So if that metric is off track for any reason, it brings an alert to the reader's attention. Just to say that there's some further investigation needed here because we're off track on such an important KPI, and we'll give a flavour down here as to why it's off track. Again, all important information delivered very quickly after month end so that people that are making decisions can actually assess what actions need to be taken. I mentioned as well earlier in the slides that graphical information is really important. So this hopefully gives you a snapshot. So this is just the revenue section of the P&L effectively. Let me just try and zoom in a bit. Oh, too much. Let's come out of that. Try again. Sorry guys, not sure what's happened here. Let me try and come out.
I did start writing down a load of questions while we were doing that, Dom, but I'll give you a moment to...
Might be a good time, Andy, because my computer screen is, I'm not sure what's happened, so I'm just trying to fix it.
So I think my questions were really around sort of, summarize it, it's like data integration. So how do you, because obviously this is based on Xero.
Yeah.
What is available, or how do you best, are there ways of automating your data going into that to be able to produce the KPIs?
Yeah.
You know, are there ways of doing that? Because you talked about getting stuff from maybe a website backend or stuff like that, which could be a right old faff, and humans get involved, so numbers can get messed up. Obviously not at Haysmac, but you know, normal humans might press the wrong buttons. So yeah, I just wonder how that process might actually work.
Yeah, it's a good question. the KPIs are obviously the end result, aren't they? But you've got, for them to be accurate, you've got to have that information feed into your accounting system in the first place. In terms of integrations, if it depends on the type of business, but if you're running a CRM system or a sales system, you've got, for instance, like a Salesforce or something like that, there are integrations available with accounting systems to automate that process. But if it's something like a website backend, or you're running a bespoke or custom piece of software, then there's not a direct API into your accounting system more often than not. So it's something that needs to be built. So there's an investment cost there as well for doing that. So I guess it's always a trade-off with the amount of time, effort, and money needed to bring those integrations into your accounting systems.
Okay.
A lot of the time, sorry, Andy, go.
Could you pull stuff out of HubSpot, something like that?
Yeah. So these sort of things, some of the more common ones are kind of set up to integrate. I'm just thinking more of the bespoke systems. Sorry, Tash, are you sharing?
I'm sharing because I've managed to open it.
Oh, brilliant!
So I'm sharing your pack. Can you see?
Yes.
Can everyone see that? All right. Yeah.
Brilliant. Thank you. Yeah, I'll carry on running through. So sorry about that, guys. I'm not sure what happened there, but I tried to be a bit too clever, I think. I was just saying around the graphical information. So this section of the profit and loss, essentially, but for this SaaS business, revenue is obviously a really important thing to track. So we've just presented the data graphically. We've compared it to rolling average last year and target, and we've broken revenue down by type as well. So it's nice and easy to see. We can compare that against budget. We can compare that against the prior year period or the prior month. So all the data you need is there, and it's nice and concise and easy to read. Thanks, Tash. Yeah, profitability, another example of kind of graphical data. Same here as well around. So this is our top 10 costs for the month and our top 10 costs for the year to date. Just bringing that to the user's attention straight away.
And clients really like the visual aspects of this reporting pack. You can see like here the color coding of like you can the size of the expenditure in a way, so they can very easily, or a board can very easily pick out the key cash outflows. And then you've got your working cap.
Just another question on that, Tash, because obviously for boards it's quite good, but it must be also very useful for investors, particularly professional investors, who are seeing a lot of information from a lot of companies quite frequently, to be able to present it in this kind of way, make it more digestible, is got to be an advantage for you as a investee company, looking good and knowing that you're on top of stuff.
Yeah, and because if you think that you're they're seeing lots of different companies and you've got to stand out from the crowd. So I always say, and I hear it often, I'm not the numbers person in the business or whatever. And my response to that is, you don't have to be the accountant in the business. That's fine. You don't have to be doing the detailed day to day, but you are going to be the one that's presenting to investors. So you do need to be able to talk about your numbers with confidence and kind of know what the balance sheet looks like, not just focusing on the P&L or the cash flow. Actually being able to talk through what a balance sheet looks like is really important. So and you're absolutely right. I think it does help build credibility amongst the investors in hearing that from a management team.
Yeah, I think many years ago I used to watch something called Dragon's Den, but it started to annoy me so much I stopped. But I think the most frequent thing that the entrepreneurs would get stuck on was figures. They would ask, and fairly basic stuff as well, not like really complex things that people wouldn't maybe understand, but basic stuff, and the entrepreneurs just didn't know it. And this is like the difference between a trade transaction and a financial transaction with an investment. You know about your product, and you need to know your business in that level of detail, or else you're just not going to look credible. So
yeah, and I think the other thing that it does, what the numbers do, is kind of add to the story. So it adds to the narrative, doesn't it? It supports the narrative. If you're talking about the relevant milestones that you've achieved in your journey so far, the numbers are almost there to back that up. So you can see, and the graphs are quite helpful here. So, if you're like winning a certain new customers a month, or, increasing your recurring monthly revenue, and being able to plot that. So when you're talking about it, you can demonstrate the numbers are supporting what you're talking about. I always think that's very good.
Yeah, rather than cobbling it around lots of different bits of data and then trying to make a PowerPoint up or something like that, just get a system together that would output that. Good, right. Before I pile in again, anybody else got any questions? Thanks, Don. That was really interesting.
I've got a quick observation, and Don touched on it, but especially in earlier stage startups, the importance of available runway, and as a worst case measure as well. So, consider what happens if you don't get any revenue from new customers over the next X months. What does your cash out date look like? And that can drive some very important strategic decisions amongst the board in terms of next steps, when you're going to have to start raising some more money, or when you're going to have to start looking at taking remedial action.
Yeah, absolutely. So, and the other thing is, investors will probably want to see more than one scenario, won't they? They want to be able to easily stress test your forecasts. And what impact does it have if I just change that revenue projection? What impact does that have? So having a model that is really easy to manipulate is also really important, which is kind of linked to that whole runway point, I think.
Yeah, that's a good point, because it's quite easy to think my growth is going to be linear. It isn't, and it might go up faster. Chances are it may plateau or something. So yeah, just be prudent and hack.
Yeah, and it's usually seen as a negative thing to talk about, but it's just very important. And
just prudent.
And everyone likes to be optimistic about their revenue projections, but in reality, if you run out of cash, you're not going to collect anything.
Yeah, and it's interesting speaking to. I was sat next to the former CEO of Truva. Don't know if any of you have come across that online platform. And he said it takes so much time, doesn't it, out of the business when you're raising money. And he was talking about, he sometimes wonders whether they should have just asked for more every time they were going out to market, because it would have meant giving up a bit more equity, but it would have saved so much more time later on when they were having to go and raise again. So just giving them that extra bit of runway, because there's always things that don't go to plan. Like the most certain thing about a forecast is that you won't hit it, and so it's therefore planning for that eventuality. So I thought that was really interesting to hear his kind of take on it, having been through several rounds.
Yeah. Yes, that is true. It's making that judgment call between dilution and cash, and at the end of the day, cash is reality. So sometimes it's good to I'd always vote for that. Good. Anybody else? We've got just a couple more minutes.
Yes. So thanks for the presentation. I think it's a good summary to have. We are trying to do it through Excel, and it takes a lot of valuable time. And also it's not so professional, and it's also not scalable. So I think it makes total sense. How complex is the setup for these tools or apps? Is it done with you together? Like how long do the founders have to dedicate to this?
I think you'll be pleased. Yeah, thanks for the question. It's a good one. It's not too time involved for you. That's why you outsource this to somebody like us. It's probably quicker and more easy than you would think it is. I think people sometimes overestimate how big of a job it is. It really does depend on the setup. So it's not necessarily a really simple question to answer, but the import into a cloud accounting system like a Xero and the setup doesn't take that long. You could be up and running within a week of the new system, and then have some training on the new system and process, and explain the best practice. We could bring in apps to support you with, depending on what you're doing, whether it's data entry or credit control or cash flow, whatever the case may be. So it can happen very quickly. Obviously, there's an upfront investment in doing that. But once you're set up, obviously, as you say, it's much more scalable. It will save you a lot more time. It makes complete sense to do it. It's just having that initial, biting the bullet upfront investment.
And do you guys have tiered pricing depending on the size of the business?
Yeah, it depends on the complexity. A lot of it is dependent on things like transaction volumes. For the setup, is a bit different because it will depend, it just depend on whether you need various tracking categories, for instance, cost centers, budgets, all that sort of stuff can add to the cost. But once we get going and we're doing your ongoing bookkeeping, that's depends on the complexity and transaction levels mostly. It is tiered pricing effectively. Yeah.
Is it tiered in the sense of, that kind of volume of transactions and turnover is this price, blah, blah, blah?
Generally,
you tailor it depending on what you find?
Generally speaking, so we're able to give you kind of like a range of what it's going to cost depending on complexity, level of transactions, that sort of stuff. But then we'll have a proper proper scoping meeting with you. And actually, if it's a much more simple business model, for instance, there might be, another fee, for instance. So it will be custom for each client.
So the reason why it's not just transaction volumes, Mike, is also because there might be like different foreign currencies in there, multiple bank accounts with different currencies. So things like that just start to add a bit of complexity. So we will always try and get as much detail about an assignment to be able to price it up properly.
Right, chance for one more before we wrap up.
Just a quick question regarding the quality of KPIs and the quality of inputs that you get into the platform. How are you also consulting your clients on what type of KPIs to choose and how to make certain that the input that you get is the right one so that you get the right output?
Yeah, good question. Thank you for that. Yeah, absolutely. I think the example I gave was a SaaS business. So obviously we work with lots of SaaS businesses. So we're able to recommend what we think is the best KPIs for that type of business. But we'll also, as part of the scoping, we'll work out the strategy, and we can suggest based off that. But depending on the sector, type of business, size of business, typically we're able to suggest some key KPIs that are best fit for the business.
Yeah, but we kind of look at it as a bit of a collaborative process in that initial setup. So I know Dom's just doing one now with one of my clients, and we went to the meeting with some ideas of what we thought should be in there, but he also had some of his ideas of what he wanted to see in the pack. And so it was kind of like a joint effort to come up with what will be reported every month.
And don't forget that the board, especially the non-execs, will have their own ideas about what they want to track as well.
That's very true. Yeah.
Yeah, good. Fantastic. Maybe one more plug for Haysmac is doing all of that stuff is great, but then also they've got loads of experts that if you need to start doing something else like raising funding and you need EIS, or you need advice on what you should be doing, there's no so who are you? What do you do? They already have their hands around what your business is and how they're helping you already. So it's a quicker, smoother way of just getting the right smarts at the right time. Thanks all for joining. Thanks again for Tash and Dom for putting this all together and giving us your time.